Morning, market comedians, and happy Friday morning, last day of the trading week. And there's my main man, Dimitri Pargamanik. How you doing, Dima?
Good morning, Will. How are you?
Great. I got the disclaimer up, so why don't we get to that first?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Excellent. So what are you seeing this morning in the pre-market, my friend?
So let's take a look. Today, maybe what we could do is talk about, we'll take a look at stocks, I think, that have been doing well recently, where money looks like, or, investors have been, allocating a lot of investments. Then we'll take a look at things that maybe, are still in the bear market or correction territory while the market is still rallying. So potentially, you could find ideas in either one. We'll discuss both. I think somebody mentioned a stock yesterday. Maybe you'll remind me what it was. We'll take a look at that. Was it?
Yeah, that was a Biotech, CRTX, and I think
CRTX,
it was a new.
I have it up. Yeah, so we'll take a look at that because somebody brought up a question on that. And if you guys have any questions, this is a chance to ask anything you've seen, either a Market Chameleon on a tool or data that you've looked at, any kind of things that you see that you think is unusual or something that you didn't expect to see. You could bring it up, because this is a way for not only to take a look and get, maybe an answer to your question, but other people can benefit from that experience. Because if you ran into something, more than likely somebody else is going to run into it eventually, and this way we could kind of take a look at that scenario. So way to ask the question, you can put it in the chat. Will's monitoring that, he'll read it back to me, or Will, you're putting a link in that chat. They could click over to Zoom, raise their hand, and ask the question directly.
Yep, and we do have the new user. Nuno is back. He is confirming it's CRTX.
Okay, does he want to come on and ask the question?
Well, I'll ask him. He's a new user, so he may not. Yesterday, okay. I think was his first day. So Nuno, no, if you want to come on over, there's a link at the top of the YouTube chat. You can click over and you can ask the question live if you want.
Right.
If not, we'll just get to it.
Yeah, and you don't have to turn on your video camera. We'll just turn on your sound. This way, you could ask the question, what you saw in CRTX, what brought your eye to it, and what is your question? It's regarding data. Is it options? Is it stock? Let us know. This way, you kind of guide us to the question, and we'll try to answer it as best we can. But I'll go to that symbol just to kind of do an overview of it, if we don't hear from him. Right. So let's start out with pre-market, the pre-market reports. So these are stocks that are trading in the pre-market hours. We have the most active stocks, the biggest percentage gainers, biggest percentage decliners. So we see here 120 made our percentage gainers list, 54 in our percentage decliners. So from that perspective, right now look like we're lining up for more bullish bias at the open. Let's take a look at stocks in the S&P 500. So I'm going to use this filter here. So I'm going to drop this down. It gives me a filter of different ETFs. When I click on it, it's only going to filter by the components of that ETF. So I'm picking SPY. This only filters S&P 500 stocks. So here we see that there are 18 that made our percentage gainers list, 200 percentage decliners. So right now we're looking like a more bullish bias at the opening. Okay, so a couple I know that are, probably releasing earnings as well, because we're like in the midst of earnings season. Having said that, I could go to CRTX just to take a look. I think I have it here, but let's see, CRTX. So here's the yesterday's activity. I don't know much about this stock, so I'm just going to kind of go and do a quick overview. And I see CRTX, I'm going to just pop open this sheet. And this here gives me a quick informational sheet that I don't have to navigate to a different page. So I see this is a biotech stock.
Just so you know, D.
Yeah.
Nuno can't come over due to technical limitations on his computer. But the idea is the premium is so rich, looks good. He's thinking about a covered call in this product. He's already getting some advice from, or some chameleons are giving their thoughts on the chat and saying that be careful that rich premium because there could be a big move coming either way.
Right.
So, anyways.
Yeah. So it's usually for a reason, right? When you see very high premiums, usually it's for a reason. So let's just take a look what we see and it's a biotech stock. So of course, biotech stocks are no strangers to large moves, especially if there's a catalyst event coming up, and it could be, either they're working on a drug and they're going to announce some kind of results. They'll have a readout, or they have an application with the FDA. So all these things matter in a biotech stock, and in biotechs, we get these, regular stocks get, earnings. You have like earnings, maybe you have litigation, you have release of new products. So there are certain things that happen in regular stocks that are catalyst events, mostly earnings, but in biotechs, they have their own special catalyst events. So you got to watch out for them. So you're aware of it, if especially premiums are high, you really want to know what's going on. So let's take a look at this CRTX. I just opened up that informational sheet and I do see here the IV rank very high, elevated. Yesterday, 9,000 contracts traded in the options versus on average 1,300. So very active right now in the options. I could see here that the stock traded 218,000 shares yesterday, on average 268,000. So more activity, I would say, in the options than in the stock on a relative basis. And the stock doesn't trade that much. 218,000 shares is not a lot of, that's not a lot of volume. And really, just as I'm scanning with my eyes, I see it's a $2.2 billion market cap. So it's not like a very big market cap company either. So it could have a really big movement, right? Look at the 52-week range. As low as $26.66, as high as $121.98. We're at $73.84 right now in between there. I'm going to take a look. Let's just go to the options chain. Actually, before I go to the options chain, let's look at this here, activity. This activity kind of gives us a summary, month by month. So here's October expiration, 15th, November 19th, December 17th. And we see here that the at-the-money implied vols are very high, especially they jump right here, October 19th. You see this little C here? That little C is saying that there's going to be an event. So right there, there's going to be, we're expecting an earnings perhaps around there, but there's another company event, CTADY, so that might be the catalyst for what we're seeing right now. All right. So look at the premiums here. I could see the open interest here. So November 19th, here's 35,000 contracts open interest. If I click on that, here's the distribution of the options and open interest. And right here, the 185 strike, has the biggest open interest on any of the strikes in November. And we see they're mostly calls. So 5,759 calls. That's really like where most of that trading is getting, targeted or clustered around. And then we got some puts all the way out here, so don't know yet what's going on there, but I'm just showing you where traders are opening positions. And yesterday there's 6,000 contracts traded there. December and January, still sizable amount. Let's just take a look here on going down December, the highest open interest here on the 30 strike, 2,268 puts. January, let me just take a look here. January, again, that on the 185 strike. Okay, so not sure how those trades, the history of the trades, but at least now I know where to look for the history, right? What's going on in that 185 strike. Here, I'm coming over here and I'm seeing, well, what is the expected move? You know, how high is this premium? Like, how much are we talking about here? Because I think the user said the premiums are really high. He's buy rating it. So here, the at the money straddle, you're buying a call, buying a put. It's implying a move of 95%. So this is almost like a make it break it type of deal, right? Like, you know, this whatever is coming up is pretty huge in this biotech. And you can see
well, in Nuno's opinion, he's feeling that the at the money premium of the call, if he buys a stock, will cover his downside. And to me, are you comfortable selling the at the money put? Right? I mean, it's the same thing. Yeah.
Right. It's the same thing.
I mean, you look at a $70 bio. I mean, I think the stock's around $70, whatever.
Yeah.
You know, you could, in my head, I could see it back at, I mean, I don't even have to look at it. I haven't looked at a graph or anything, but I'm sure it's come from somewhere in the teens, right? And I know it's got an event. I remember yesterday looking at some event coming up. You know, it's like the thing could have an incredible range.
Exactly. Yeah. Yeah. This is pricing in some, you know, it's going to move, you know, whatever this news is, it's priced, it's going to move. You know, you got the straddle $70, you know, going out to December, January, you know, 85, 88, 92. So it's either going to make a really big pop, or we might see this thing go, you know, I don't know, maybe down to zero or $1. Who knows? But look at that straddle. So let's take a look at, you know, let's just take a look at that options chain, what we're talking about here. So before I do that, let me just see something. So here are the company events, right? So here, CTDA, November 9th, November 12th. So that's what we're looking at. I'm going to go to that one way. Also, we could go to that company's website. So I'm going to go to the company website. You know, and you could go to the investor relations and just take a look at what is, let's look up the events count. For some reason, they didn't list that event, but let's see news releases. So here, so we're designed to present results from the GAIN trial, phase 2-3 study of, you know, whatever this is. I'm never good at, you know, these drugs, but you could read more about it, you know. So
and just so everyone knows, I mean, we've mentioned this in the past, but there's a whole world of options traders. All they do are trade these biotech events.
Yeah, trade these. They understand them really well. They understand the drugs. You know, you'd have to do your research, like, you know, about the drugs, about the prospects of these drugs, the market out there for the drug, and all this stuff. So people keep databases of this, but you could see here that it looks to me like they're going to have some kind of a readout. It's going to be between November 9th and 12th in this, you know, clinical trials on Alzheimer's disease conference. You got to keep, and they're giving you some information here. You can probably dig deeper in there. But, you know, I think they even had like other things in the pipeline, but you could see that right there is a big deal. I'm just going to go really quickly. I just want to see something on a fundamental side. Let's just take a look at their balance sheet here. You know, like quarterly.
By the way, this stock was almost $100 stock at the start of the month.
Oh, really? Yeah.
I'm just looking at a chart right now for the first time. We're showing it.
Yeah. You know, it looks like they don't make, you know, their total assets 161 million. Let me see their cash flow. I'm just curious to see how much, you know, cash flow that they have. So you could see there that they, you know, they're burning cash. You have $74 million right now in cash. So, I mean, I don't know, maybe they could last a while longer after that, but I don't know what else they have in the pipeline. So, 74 million in cash, you could see how much they're burning up here, but this might be the only drug that they have, so you got to kind of go and do that research. Is it like a make it or break it for this company? But let's come back to the options chain. So here's in the November, right? And what was so this was really the strike that people are coming after, the 185 strike. So it's 151% out of the money. So you could imagine what people are pricing in if this is a big hit. You're paying $21 or $185 out of the money. And I could see why that looks very juicy, right? That is very juicy. Here's 300 options traded yesterday, 329. You can see for VWAP price 23.47, 526, 21.81. So it's kind of, a lot of trading going on. It's a wide market, so a lot of trading going on in this option. Some of them are doing spreads. So maybe they're part of like a vertical spread or time spread. Some are just straight out, purchases in the mid market. But this kind of gives you an idea how it's trading. Let me take a look at the history, the tracking of this. So here's the history of it. So we see here we're at 6,000 open interest, and you could see really the open interest started climbing around October 6th, right? So I'm just going to show you kind of the history of this option, right? So really that's where it got maybe started getting a little bit interesting. This option was $33 October 6th or October 14th. You could see then open interest climbed to 2,000. This is where the option closed. This is where the stock was 90, 87. Stock since October 6th fell, we're here 73.84. That option went from $34 right now to, now we're at 21. Again, the option fell because the stock price also went down, right? But you could see that steadily, we went from 500 options open interest from October 6th to 6,000 October 14th. So a lot of, there has been a lot of interest there. It looks like people are going after that option. Looks to me like they're, pumping up that implied loss, or so more buyers of that option than sellers. And we could see that reflected in the premium. Now, there might be opportunities there throughout the day, even day trading. I don't know, because with implied vols this high and things trading, the way I'm seeing them, in wide markets, and things here are, you got scattered. There might be just day trading opportunities, perhaps. Let me see this one. Here's the 50 strike. So here's the 50 strike, 24.10 trading here. You could see even the 50 strike, somebody's paying $24, right? Again, I'd have to look, a lot of these are complex trades. It's an interesting find. I might have to sit there and think about it and see, look more at how these things are traded to get a better picture. I like to paint myself a better picture of how the options are flowing, where the demand is, and how I would strategize around it. But it's an interesting find, and I'd probably go read a little bit more about this, Biotech, try to find some more information on it. But you still got, what do we got, a month to go? So there could be a lot of trading opportunities in between there, right? Because until it's released, who knows how people are going to be placing their positions, and maybe there's opportunities not to hold it through the event, but in between. Hopefully that, Will, you're on mute.
Sorry, you look at just what happened with the stock since the 1st of October. I mean, the range has been $25. So there's a lot of interesting stuff that could happen between now and the November meeting.
Sometimes you get a pop. I was talking to one of our, so we have biotech traders for sure that really know what they're doing. I was talking to one guy here. He was a biotech in Biogen. I don't know if you guys remember this pop, but they had a pop, they had a readout, and then according to him, he's like, this is like a BS drug. So every time something happens, it comes back down. Let me show you how that one looked in the chart. I'm not saying this will happen the same thing, but this is why it's important to kind of know the drug, right? Like know what is it about. Like, so here it had like these events, they come out, with these events, these readouts, it has a big pop and then comes down. Like, so here in Biogen, I think they had a pop right here from 269, right? Let's say 270, went all the way up here to 395, really big move, right? And it was priced into the options, so it was good news, whatever. And then, here we go, coming back down to closing the gap, so that's why it's kind of important that people who pay attention to this, and I know that he was saying like when this happened, they were saying, no, this is a BS, it's coming back in, and, and he was right about it. So he was telling me this. So there's different ways to play it, right? But you were talking about healthcare, and healthcare has its own, nuances and events, and you kind of have to know what's going on in it. But unless, again, I don't know the specific question, I'm just kind of just doing a quick overview. If I didn't answer your question, that's why it's always on.
I guess the technical issues for Nano, the new Chameleon, have been fixed. He's come on over and he's asking to talk. Are you
okay? Yeah, let me come back.
All right, we're gonna bring on a new Chameleon who's just joined the last couple of days on the chat and asked this question. Here you go, Nano. Come on in. How you doing, Nano? You want to unmute yourself? Thanks for joining us.
Hello, everyone. Thank you very much.
Hey, how's it going?
And sorry, already wasting your time for 10 minutes. So because my idea is very simple to understand, I believe. So you already agreed that the premium at the side around like 50 to.
And then you're breaking out. I can't hear
60%, right? So my for a good trade, and also.
Now, I don't hear the question. You're breaking out.
Can you hear the question?
I can't hear it on my side. Well, can you unmute yourself for a second?
I unmuted Nano. Nano, your microphone is breaking in and out. So
yeah, it's like reverberating. Maybe if you speak closer into it, or maybe you have some background.
What about now? Is better?
Yeah, try to ask the question again. Sounds
okay.
better.
Okay. So the idea for a trade is, okay, if I buy the stock, right, at the money, of course, and I do the covered call at the money, the premium there can cover around like 50% to 60% on the downside, right? And by other hand, if we see there the premium, the risk is to the upside, right? So the market is expecting to go to the upside. So the probability to go to the downside, it's not as high as the upside, right? I believe. So I think it's kind of safe. I don't know, just unless I'm missing some pitfall there. But since the premium at the money can cover a downside around 50 to 60%, I think we have a good cushion there.
Yeah. So I just queued up what you were talking about. So selling that at the money. So here 75 strike, let's say 39.40, right? So I have it here at 39.40, and then you're buying, right? And then you're buying 100 shares. So here's the payout, right? If it sits here, that'll be the best situation. If it goes down, here's your break even, 30, like 35 bucks. If it goes up, you're covered with that premium. So what you're essentially in that. And here's the thing, I don't know enough about this drug or this company to tell you that you're definitely, because I understand what you're saying is 50%, but if this is a make it or break it deal,
Yeah.
it could be $5 the stock. I don't know. That's happened too. You'd have to do that research and make that evaluation yourself, because the market is pricing it in, for a reason. They're not just giving you the money, they're pricing it for a reason. You have to make that evaluation. Have they overdone it or not? But just to give you an idea, this buy right, when you're buying, 100 shares, 100 shares, selling the call 75, strike. You're doing the same thing as just selling the money put. It's the same thing. Okay, so here, let me show you. You see this payout diagram, right?
Yes.
Now this is the buy right you're talking about. What you're doing is the same thing as just selling this put. Okay. Here. You see here?
Yes.
Exactly this. It's exactly the same thing. They're synthetics of each other. That's how options are priced. Otherwise, you'd have an arbitrage opportunity. So, you just have to do. You have to do the research. I don't know enough about this company. I don't know enough about this drug to tell you, like, whoa, well, if this trial fails, I think that it's going to drop by 40%, not 50. I don't know. I can't tell you that. And I can't tell you if this trial, if it's successful, the company is going to shoot up 150%, or, and it's going to drop after this, or it's going to keep climbing. I don't know enough. You have to kind of do that research. It's a special situation.
I already opened the trade. I'll let you know how it goes. I opened 2 days ago, I believe.
Yeah. And look, sometimes, you have time to go, right? So you don't have to necessarily hold the trade through the event. Sometimes the trading is best. It's more because it's erratic. Nobody knows how to price this. Things are moving around that even closing it out before the event, if it turns out profitable, might be good enough. But again, I don't know enough about this stock because it is a special situation, and you really have to analyze that situation.
Yeah, my idea is just to close in maybe in 1 week and take advantage of the theta decay, and let's see how it goes.
Yeah, exactly. It might decay because you might. Yeah, I don't know. Like right now, you see what they're doing is coming after that 180.
The risk is to the upside, right? It's like everyone is expecting a big move to the upside.
The risk is also to the downside,
and to
right?
the
downside, this stock could print the next day at, like Jake said, zero. It could be a $5 stock, like Dimitri said. It could go back to its low 22. So you got to be comfortable. The red part of that graph, you have to be comfortable owning it at the bottom part of that red graph.
Yeah, I'm comfortable with losing all of them.
Yes.
No problem.
I mean, and you look at those 2 points and then look at the premiums. You look at where it starts flattening on the upside and where it starts going red. Are you comfortable selling that call up there and selling the put down? Other people look at different things. Is a strangle a better way, or is a iron butterfly a better way? If you're looking at the moves and comfortable with it, different people look at different things.
They'll look at they'll look at different things. So that's why I don't think you could say that the risk is to the upside and not the downside. So I think the way you're saying it, I just wanted, because I think the way you're saying it sounds weird, because the way you're saying it sounds like, well, it's either going to go up or it's going to stay unchanged. And that's not how the options are lined up. It's saying it's either going to go up a lot or it's going to go down a lot. That's what the options are saying. But it's not one-way risk, right?
You have to be comfortable if that stock position is at, in my opinion, between $0 and $5. I think Jake has said 0 in the Zoom chat. Dimitri says 5. It could go significantly low. I mean, I don't know what Dimitri said there's $100 million on, they could burn through that in the next quarter potentially. You don't have the lifeline to this company is maybe all dependent on this one announcement.
So that's what you have to kind of be aware of, that, because look, you can't, it's not like you could stop your, look at the puts, right?
I also have a premium there, yes.
On top the downside, so the risk is to the
exactly,
downside.
Yes.
So you don't have cheap protection either, but
No, no,
Yeah,
no.
I mean, these are pretty pumped. You know, this is a really big monster move that they're pricing in. So, you know, if you think it's going up, I would even say if you think that that's where it's more likely to go, you know, maybe even, I don't know, selling these as a buy rate might be even a better deal. I don't know, you know, but let me just see something. I'm going to just try this. I'm going to sell this, right? Let me just see how this looks real quick. These are really pumped. Let me see if I buy this, buy the 100 shares, just to see what the graph looks like. Where am I stopping myself out? Let me see 20% out. So even 20% out, you know, maybe there's your stopping point. So here, at least, you know, if you do it this way, you got a lot of upside, a lot more upside here. You know, you're stopping yourself out. What did I say? At $4,000, you know, but you got, you know, like you can see here, you got a lot more upside here. So what I'm doing is financing this put, you know, by selling that way out of the money call. Obviously here it's a play on the long, so I'm hoping, you know, goes up. But maybe this one, again, I have to play around with the markets here, but at least here maybe you're stopping yourself out at a more reason, you know. Again, I have to play around with it, you know, and think about it. I'm not good at looking at this and talking at the same time. I'm kind of
No problem. Is already a good help.
Yeah.
And I promise next time I'll have a better connection. Eh?
Yeah. All right. Well, thank you for the question. It's an interesting scenario, so really appreciate it.
Thank you, guys. See you soon.
Thanks for joining us, Nuno. Before you go, I want to make sure you've been invited to the Discord group. A bunch of chameleons have started a group that they go on chat about positions, because there's actually a lot of insight if you go back and read the YouTube chats while you've been on. Different people have mentioned different stocks where they thought that, you know, this type of position was, you know, the premium was just too good to pass up on the sell side. And, you know, they mentioned one stock in particular, FBRX, which is with another biotech. It was in the 50s, is now at $2. So you have to be super careful about your risk always. So.
I know. Yeah.
Look, the one that I just traded, you know, here, you know, if it goes up, you're talking about, you know, potentially making 12 grand versus losing 4 grand. You know, so here, you know, if you're leaning towards the upside and you think it's more likely to go up, you know, then the payout here is, you know, what, 3-to-1, something like that. So if you do it this way, but I would have to play around.
On the downside, I also believe then I can play a little bit to roll down or roll over in time to get a little bit more premium and to make the break even go lower. Even the premium after the event will be much less, of course, but maybe some premium there. Let's see.
Okay.
I'll play with it.
All right. Well, thanks for we're after 9:30, Will. So I think we'll.
Oh, let's go see the market. Thank you.
All right, Nuno. Hopefully we'll see you on Monday. Thanks for doing this again, D. Great job, buddy.
All right. Thanks, everyone. Have a good weekend. Stay safe out there. Have a good trading day, and we hope to see you Monday.
Trade in peace, chameleons. Monday we have Jake's show as well, D, at 10 a.m. Jake and I doing first call. I'll put that link into the YouTube chat, and also I'll put the Discord link because I did mention that into the